All right, thank you for listening. So this episode is with Nic Espanet. Nic is based in the Dallas-Fort Worth area. He had his own practice. He was a physical therapist and had his own practice for over 20 years. He left that only a few short years ago, and now he's a full-time real estate investor. I've known Nic for a few years now, and I've gone to him a lot with questions. He's always been extremely helpful and generous with his time. This is just such a great episode. Can't wait for you to listen to it. Thanks for listening. Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook. Thank you for listening to the Passive Investors Playbook. I am Charlie Hardage, and I am joined today by my guest, Nic Espanet. Nic is a principal at Thrive Multifamily, a firm that focuses on integrity, passion, and excellence. Thrive Multifamily purchases apartment complexes where they add value to both the residents and the property. Nic started passively investing in apartments in 2016 and became a lead sponsor and active investor in 2018. For over 20 years, Nic was a physical therapist, but he left his job in 2020 to be a full-time real estate professional. Nic's portfolio consists of over 3,500 units spread across 16 properties. All but 2 of those are based in Texas, where Nic lives. Nic has 17 years of experience as a small business owner and has honed his skills in managing teams, ensuring optimal performance and quality care, which has seamlessly transitioned to real estate. Nic, I'm so thankful that you're here today. It's been awesome knowing you for probably close to 3 years now. And in that time, I know you and your company and your business has just exploded and taken off. So thank you so much for being here.
Hey, Charlie, I appreciate you having me here. It's been great getting to know you and seeing you grow through the system and adding units and becoming more and more successful, and your podcast doing well too. So thanks for having me.
Yeah, definitely appreciate that. All those compliments, Nic. Do you mind telling the audience a little bit more about yourself?
No, not at all. So, like Charlie said, I've got in the commercial real estate world about in 2016. Started off passively investing. Actually thought that was all I was going to do, but the more I studied it as an LP and just looked, it's like it's not that difficult. It takes persistence, but. So that's when I decided to step up and work on educating myself to become a syndicator. Was able to close my first deal in February of 2018, and that was a 100-unit property. 10 months later, closed another 124-unit property, and these are as co-syndicators. I had 2 partners on those first 2 deals, and then we brought in a 4th partner on a larger deal, a 228-unit property that closed in August of 2019. And then COVID hit that spring of that, and then kind of shuffled around. A couple of guys that are in that partnership went different routes. And myself and one of the original guys, we bought a 128-unit property in December of 2020. That's a neat story on that one. I actually signed the paperwork. They had a mobile notary find me in Disney. Our closing got pushed out a little bit. We already had a family trip. So, and I thought I'd signed everything, but there are a couple of documents that still need to be signed. So family's cruising around Disney. I took the shuttle back, or one of the sky trams back to our hotel, waited about 20 minutes for the mobile notary to come, signed a couple of documents, went back. I mean, I was probably away from my family an hour and a half at tops, got the paper signed out. My wife jokes that, I was focused on the family, but she has pictures of me all in every Disney park on the phone as we're trying to get this thing, closed across the finish line, get all the loose ends tied up. So I'm trying to juggle both, but it's great. So all those properties are in Abilene, Texas, and we started looking in primary markets in 21 and was able to co-syndicate 3 different deals, 2 in Houston, 1 in Dallas in 21, and then 22 slowed down a little bit. And I was part of a deal in Arlington, Texas. And then we're looking, it's slower right now. We're making offers. I may have news in the near future, but we can't really share much now. But there's definitely opportunities there. They're not as prevalent as they were a year ago, but there still are opportunities. So, and then some of my background, I kind of got off on so like Charlie said, I was in healthcare. I was a physical therapist for 20 plus years. Loved doing it. But just that, like a lot of people get into real estate or investing is trying to find something where I don't have to basically punch a clock every day or work, have the freedom to work for myself. So, transitioned out of that in 2021 was the last time I saw a patient. And so it's been great. Do this full time. I do at times, my wife and I joke that we went from a 9 to 5 job to a 5 to 9 job. So there are days that are long, but there's also times where we travel. I can carry my laptop almost anywhere and work if we need to, or take a few days off and and not be present. Now, when you have it, there's certain times within the cycle of a deal that you are probably working 15-hour days.
Yeah.
But there's other times when you don't really need to look at them. I mean, you have teammates. Like if we leave, I try to completely unplug from a property unless there's a major catastrophe, a fire, something like that, which I've not experienced. I really don't want to be notified on anything in the properties.
Yeah, man, that's awesome. I love your story about Disney. And I think you did that strategically, Nic, because they were going to the mini mine train ride, which is like a 2-hour wait. And you're like, I don't want to wait. So no,
I will say that 20 minutes I waited, I took a little nap because
it's hot there. It can be really hot at Disney, a lot of walking.
Yes, no, for sure. That was in December, so it wasn't as bad,
Okay.
but which is great if you've never been with me. That was my first time to ever go around Christmas. So it's always magical there, but
yeah,
with all the extra lights and stuff was neat also.
That's cool. Well, Nic, I love that story, kind of how you got into the commercial space, and from the LP side at least. And I found that with a lot of my investors, they love their job, right? Or maybe they don't like it, but they want some additional streams of income. And so that's probably what you initially got into the passive side for. Is that
Sure.
correct? Just
Exactly. So I was looking, I had my 401k going in the stock market, but when I would read about it, it just glaze over. And then also it's so volatile and it's not a tangible asset. And so as I started educating myself, learning more about real estate, knowing that it's a physical asset that's going to appreciate almost all the time with when there's inflation, the value of our properties are going up. I mean, inflation is not good overall, but you know what? Our properties, the value is going up as inflation is going up. We're buying today's dollars and we're investing our investors' money with today's dollar, but we're going to sell it on whatever the dollar's inflated to 3, 5, 7 years down the road, whatever the hold period is. So, and knowing that there's always, if you buy in the right markets, there should almost always be pressure to because population growth. We want to look at one of the first things we want to see positive population growth. If I saw a great looking deal for a great price, but then I pull up some of the demographic reports and I see that population is declining, I would not make an offer on it.
Yeah.
If you're not having the pressure of population pushing rents, then your rents are probably going to be coming down.
Yeah, and you said something that I definitely want to touch on with inflation, because in general, inflation, especially in 2021 and 22 was massive, right? And that's all you heard about on news and newspapers, social media, whatever. I don't know if people read newspapers, but figured I'd throw that out there.
Sure.
But yeah, it's not a good thing because the cost of goods and services goes up. And in the case of last year, it was the most it had been in 40 years, which is insane. So, along with looking in markets where there's growth, both population and job growth, then you couple that with the massive inflation. And so I love what your analogy there, Nick, of, hey, when you buy properties in 2021, you're buying properties at $2021, but then we sell it, whether it's 3 years, 5 years, 7 years, 10 years, whatever, at those dollars. And, coupled with inflation and the growing markets, the growing demand for properties and for units, a lot of these markets that we invest in, they were up 20% in 1 year, which is pretty insane. And so while we don't like inflation from, just a person standpoint, we don't like it. It actually benefits real estate investors because rent goes up as well. So I like that point that you made, Nick. How did you get into real estate? Did you invest in single family at first, or was 2016 kind of your first endeavor
I skipped single family. I had analysis paralysis, Trevor. I could tons of books on single family investing, went to some seminars, but just never pulled the trigger. Now, my wife's dad owns a 12-unit property. So he's always, and he at the time back then had several single family homes, a few little commercial retail buildings. And so he just talking to him about what that involved. And then he brought up going to some classes. One, he wanted to see how to evaluate his property. He bought his in the mid 80s. It's been paid for many years, just cash flowing, but he didn't really, he's like, I don't know how to determine the value on it. So if you guys, I'd like for y'all to go to this class, my wife and I to go to this class and learn how to evaluate the properties. And that's where I went and I was like, this is pretty cool. And, I was skeptical at first. I'm like, is this some kind of a pyramid thing? And I kind of hung out, did some investigating, couldn't find any negative publicity on any of these organizations, and then joined. And I still, for a while, I was like, but the further I was in it, there was many professionals, engineers or physicians, dentists, IT specialists. And I was like, if these guys have people fooled, he's got a lot of people fooled, a lot smarter than me fooled,
right,
that are doing this. And I'm seeing these deals sell, and people that had invested when I came in, deals were doubling money in two years or less, 3 years. So you could put 50,000 in a deal, and 2 years later you're getting 100,000 back.
Yeah,
or some of them 150 back. It was insane. So I was like, so I was all in, and we actually, my wife and I, we rent a house because we had a lot of equity in a home, and as I didn't do this right off, as we got more and it felt more comfortable with it. We when we went to sell our last house, that was 2 years ago when it was hard to buy a house without drastically overpaying. And so we came across a house that fit in our budget in the neighborhood we wanted to be in that was for rent. And we just signed our third lease. So we're about to do our Juris rental. And I like it now because something breaks, I call somebody else. And so it's nice. It's not the perfect house we'd like. One day we'll do that. And that's so what I was saying is that we bought so much in that we cashed out our equity out of our home and we put it in real estate. Now we have income producing assets with that money instead of a home that would appreciate, but there's still expenses. I mean, plus might not have helped. My first two homes owned were built in the 50s. So there was always, I love those older neighborhoods, but those houses, there's always something going on with the house. So even this one I'm in now is only less than 20 years old, but but I have a landlord now that fixed it.
Yeah, man, that's cool. So you guys sold a house, your primary residence, instead of taking that money, putting a big down payment on another house, you said, hey, let's invest in commercial properties and apartments, because as Robert Kiyosaki in Rich Dad Poor Dad, as he says, the wealthy buy income generating assets before they pay expenses, really. Right. Sure. And so that's what they focus on. So then you can take that income from those assets and then either reinvest or use that to buy a house or a car or, things like that. So I love that you are using that strategy, Nick, because I think that's not taught in schools. Most people don't say anything like that whatsoever. But I think the people that do it, you can see they're doing quite well because they have a different mentality and mindset.
Yeah. And we still, with friends, we try to talk about it. I don't bring it up a lot because they're like,
Yeah.
you're crazy. You don't own a house. And yes, you can appreciate, but it's not growing as much as we see in real estate.
Yeah.
And it's really a liability because it's expensive. You got to fix things. And I assume it's the same in every state, but Texas, even if your house is 100% paid off, you're still paying pretty significant property tax.
Yeah.
And if you don't, you'll be on the courthouse steps, having the house, or your house will be. So it's been, is it Robert Helms, or was it maybe Robert Kiyosaki or Grant Cardone? Somebody's like, if you own multiple doors, you're generous because you're helping people. If you own one door, you're selfish because you only act. I don't remember who said that, and I'm butchering the quote, but there's some kind of a saying along the line.
I think it's Grant Cardone, and
Okay.
he's also a huge proponent of rent a house and take that money and invest in a business, or well, I say business. He says business, but he invests a ton in real estate. Huge $1 billion real estate firm that he has.
Yeah.
So I love that. So you've been so successful. You had your own practice for years and years. Why real estate? Like, what was it about real estate that makes it so attractive?
It interests me. Early on, I thought I would do fix and flips, and should have started doing it early because I do like fixing things, like working with my hands, but it's also, I can see it. When I was looking at the stock market, I'm like, yeah, we're putting all this on. I don't see any of it. Maybe some graphs on the computer screen, but with the real estate, we can go out and look at it. And a lot of it's people business. I'm pretty introverted, but within the real estate realm, I've really come out of my shell because I enjoy talking about it. Prior to real estate, if we're at a party, I'd perfectly fine kind of sit in the corner, chatting. But, now my wife is extremely extroverted, and I'm trying to, hey, it's time to go home. What time are we leaving? And now she's like, hey, when do we get to leave? Completely flip. But I just enjoy real estate, but a lot of it's just seeing the appreciation on it. And if you're buying in the right markets, nothing's a guaranteed or 100% guaranteed, but it should always appreciate. That kind of, even talking about a single family home, you buy it and maybe you put a renter in it, or it is going to appreciate, but you do have expenses. But you're living there, you're not getting an income on it. With a single family rental, you're at least getting the renter paying your mortgage on it, and hopefully putting some in your pocket, but you're getting appreciation. And again, you go back to those landlord-friendly states with positive job growth and population growth, the value of the home should be going up. Even with inflation, it's the value. But then if you put pressure of population growth, it's going to even improve more.
Yeah, totally love that. And I know earlier you also said hedge against inflation, which is so true. And, and to the audience, the way, and you've heard me say this before, but the way that commercial property is valued is the net operating income, NOI, which is all of the income minus operating expenses. And you divide that by the cap rate or the capitalization rate. That's how you get the value of the property. And so what you can't do in single family is, sure, you can add a building or a room to it. You can fix up the kitchen and, kind of flip the home, but you're still pretty much, there's only so much that you can add value because it's tied to the local comps. Whereas in apartment complexes, because they fall under the commercial umbrella, it's not only is it increasing income, but you can also increase the value by reducing expenses. So you get a 2-for-1 there. And, I love that. But on the flip side, we're not doing it just to make money. We do it because we improve the community, provide a great place, a safe place to live. And so it's, you mentioned, Nick, that you're extremely passionate about real estate. And as an introvert, you just, become an extrovert when it's real estate related. I think I'm the exact same way. Parties, I'm like, yeah, okay, it's time to go. But when we're talking about real estate, they have to kick me out, right? Because just sitting there talking. So, and go ahead.
Good. No, as I say, on the cap rate, the beauty of that is just think on a 5 cap. For every $1 you improve the operations of the property, either by lowering your expenses $1 or increasing your income $1. On a 5 cap, just because it's an easy number to do, that's $20 in value increase. So think if you improve $100 or $1,000 or $100,000, it's crazy that you can come in and improve the operations and lower your expenses or increase the income, and you're just almost 20x in the value for every dollar that improves. So it's one, and then if you're at a lower cap rate, it's even more, and a little less that but I don't know, cap rates just they're fascinating, especially somebody that came from a healthcare background and didn't know what a cap rate was 8 years ago, and just learning and seeing how that works. It's awesome.
Yeah. And essentially, to make it easy, essentially it's a multiplier is what that is. And if you're a small business owner and you've either bought or sold a business, you typically take it, the EBITDA or EBITDA, and then it's the multiplier, and that's how you figure it out. Same thing in commercial property. So yeah, I love that. Totally on board with all of those points that you have said, Nic. And you kind of touched on it a little bit, but you mentioned you had a 401k. Is that how you invested in some of the first deals?
Yeah, my first two were through 401ks, and they did very well. We doubled those in a couple of years, so it's a great avenue to start with. With your 401k, and at least for me, cash flow wasn't as important because it's not money I'm putting in my pocket to go buy something right away. So looking at maybe some value add that is going to get more pop at the end where you're going to have appreciation. But I think it's a great way to start, and it's you can't I just to educate a little bit that can't be done through it has to be, at least this is my understanding, through, if it's a job you still have, you likely cannot do it. But if you've changed jobs and it's a 401k from another job, you can set that up to a custodian who can then go in and do the investments. There are some other like QRPs, and I'm not extremely familiar with those, or a solo 401k where it's more like a checkbook, or some ways where you don't necessarily have to go through the custodian. I don't know what I know about them, but not extremely familiar with them.
Yeah, no, I love that you had mentioned that several minutes ago, because I think when people hear, oh, it's and all deals are different, but I'm going to use $50,000 as the minimum because I do think that's most common, but I don't have $50,000 cash, so I can't do this for 5 years, 10 years. It's like, well, hold on a sec. Do you have a IRA from a previous, or a 401k from a previous job? Well, yeah, I've got 3 of them. Well, guess what? You can do it then. You can invest in, most deals allow self-directed IRAs and solo 401ks. So definitely look into that. Reach out to Nic if you have any questions, and or myself. We can put you in contact with people with experts, because Nic and I are have a good understanding, but we're not experts. So
exactly, yeah. Don't hesitate to reach out. But it's great. Yeah, every deal I've done, we've accepted it. It's usually you can take up to 24.99%, so just under a quarter of your total raise. I don't think the laws changed, so depending on what the raise is going to be, it can be a significant amount of money that can come from IRAs.
Very cool.
Our 401ks, our same. It can be traditional.
Okay. You mentioned something earlier that hit hard for me, because I was in there in the same boat. But you mentioned analysis paralysis. So you had done a ton of once you talked to your father-in-law about real estate, you kind of got a little excited, and you had looked at flipping homes or single family homes or some type of real estate investments, but you never did anything in there. I was pretty much, I ended up getting a couple single family homes, but it took me about 7 years to do that, because I was in I'm risk averse, and I suffered from analysis paralysis. What do you think, why, how did you break out of that analysis paralysis? Because now you've done 16 deals in only less than 5 years, Nic. So obviously something big time changed. What do you think that was?
I think it was I've really started reading more mindset, educating myself on mindset too, and knowing that, part of it was the mentorship program I was in, but knowing that you're never going to have every single I dotted perfectly, T crossed, and at some point you have to just take the step, take the leap, and figure it out. And getting that mindset that I could do it, and having a team coming in. When I was looking at single family stuff, I was looking at doing it by myself. And I think that light bulb just clicked, that having a team with me. I met someone early on he was probably 6-9 months ahead of me in the learning this system. And so he and I just started underwriting deals together, bouncing ideas off each other. And so when we had a deal that looked like it was going to work, we agreed. So it had somebody else kind of confirming, helping us. And we had a more experienced guy that came in, looked over the stuff, and also said, no, everything looks reasonable. You guys, and that deal's doing great.
Yeah.
But I think it was having another partner that, said, kind of pushed, because, you hit those times like, oh goodness, no way. And that was early on. And that was now it seems like a small raise. I'd love to raise $1.5 million raise. But at the time, I started out, my net worth was in the mid to high 200K. And it's gone up significantly from that. But thinking about trying to raise $1.5 million and buy a $3.7 million property was just is like, wow, is this capable? Now I've gone through and been part of a deal that we did bought a $30 million deal. We bought a 23 million and 22, stuff in the high teens. It's just unfathomable. We're raising $8 or $9 million. So it's just, it's great, but it's still, there's every once in a while I have to pinch myself and think, but it's just a mindset. I still get scared. We've made an offer on a deal recently and the LOI looks like, or it has been accepted, but I'm like, oh no, do I really want it? And I've done that on the deal's great. I love it. But every single deal, it's not a buyer's remorse, but like, oh crud, what did I get myself into type deal? So it's, and I think it's good to be scared. So if I wasn't, I think it's over. And that little bit of fear motivates me. Yeah. It's going to keep me working. I know that, I told my wife when I was the next 3 months are going to be kind of busy, but it'll be worth it. We get this October, we can relax a little bit, but it's I think it's mindset, just knowing that I think the mindset stuff is something as a perfectionist. I used that desk, my desk looks like heck right now, but everything was perfectly aligned and just had lists and everything. The biggest problem is that I could never check every box that it was 100% guaranteed going to succeed. And there's very few things in life that, especially if you're looking at producing income, you've got to have a little risk to make money. And you said it earlier, though, we do this. We're doing it to make money, but it's also, we're improving these properties by coming in, putting money, making nicer units. This is, our units are, many of our tenants may only live in apartments their whole life. Yep. And it may only live in B and C apartments their whole life. So if we can make those a little bit nicer and cleaner, and especially safer, by, watching who we keep really strict on our tenant approval on guidelines on what people that are going to, no felonies and things like that. It's just to keep it safe, things like that are giving back a clean, safe place for people to live.
Man, I love that so much because, I've one of my buddies had a property and it was only 50% rented. He was buying this property, or he was looking at buying the property. He actually didn't own it and they never ended up moving forward with it, but he was looking at a property, it's 50% rented. And it was only rented to felons, and no one wanted to, it was a phenomenal location, nice apartments. Those units were trashed, but the other units weren't trashed, but no one wanted to move there, even though it was good rent, great location and nice units, but no one wanted to live there because still probably the current owner, didn't take care of it for him. He just wanted the cash and all that. So I truly think there's a sense of satisfaction of doing what we do. Obviously the passive investors are such a huge part of that, because they typically are, they have 70%, 80% of the deal, right? And so our team runs it, but they invest and they get those benefits alongside us, and they know that they're helping communities as well. One thing that, with the analysis paralysis, Nick, where I was at, it's same thing that you said. If it's single family, I was doing it by myself, right? And that's not something that I necessarily wanted to do, because I wasn't 100% sold on my experience of being able to run the property how it should be ran, even though, in theory, I knew how to do it, but I just never took that leap. And I think the big thing for me was being able to passively invest with people that had done this, not once or twice, but 100 times, and the first two deals I jumped into, I did them very quickly, because when I found out their track record, found out what they were doing, and educated myself, I was like, oh my gosh, I am not running this by myself. In fact, they're not running it by themselves. They have a team that can do it. So that was really impactful for my journey, because I felt like I can finally have my money work for me by giving it to, investing alongside someone like you, Nick, who has a ton of deals, who has a ton of experience doing this. So for me, that was a huge kind of weight lifted off of my shoulders.
Sure. No, and that's great with having partners, because it's rare that you're going to buy one of these deals and everything's going to go perfect. Yeah. There's going to be some kind of a hiccup. And that's why we try to build in, we do build in some conservative parts of our underwriting. And the area where conservative may not be the area where the problem is, but if you have the problem over here and you're conservative here, but this goes okay, it gives you cushion. But that's having an experienced team is wonderful. That's on my first deal. We had a guy, he wasn't part of the asset management team, but he's experienced, and we probably called him every 2 weeks. Myself and Brad, the other guy that was the other asset manager with me, we were doing this, that's our first time. But great, I think it's important too, being in that role, is knowing what you don't know. And so we would get to something like, this is, we haven't experienced this. It's not very straightforward. So we would call up Dustin, the other guy, and say, hey, have you seen this before? And another great thing is having a good property management company.
Yeah.
They are, to me, are really the most important, because they are there day to day on your property. Your leasing agent, not your leasing agent, your property manager is running your whole, they're over your leasing agent, depending on your size. If you have employees, leasing agent, maintenance lead, maintenance tech, they're directing traffic on all those areas. And they are, so that is something, it's just kind of a tangent. I really think it's important taking care of your staff. You have good staff, pay them, because nowadays, if you're trying to get by cheap, they're going to, but let them know they're special. Let them know that they're doing a great job, buying them lunch. I was in Abilene yesterday, and we took everybody, all the employees of one of the properties to it. They let them pick a restaurant, like a nicer restaurant that was steak and one of the nicer restaurants in Abilene. And they earned it, because we did it. It's kind of a cool thing. I recommend it. We had a contest between all 4 properties we have out there, weighted by the number of units, but whoever could get the most 4 and 5 stars for them on Google reviews for the month of June.
Wow.
And so even the properties that didn't, well, first of all, the one that won, it's a 228 unit property, so it's bigger, but they got over, I think only 4 of them were 4 stars, but they had over, I think, 55 total 4 and 5 star reviews. So we went from I believe a 3.2 to a 3.8 Google, our average on our Google rating. So that property, great. But the other 2 had double digits, high teens to 20 5-star reviews. It cost us a few $100s to take them all out. And one, they got lunch, but we got all our properties just a nice boost on it. Everybody went up at least 20 basis points. Wow. on their total. And we got a bunch of 5-star, 4 and 5. We did get a few 1 and 2 stars that when they asked people, they got some of the people but it was only 1 to 3 lower ratings. Some of somebody's always going to grumble, yeah. But it brought some of them out of the woodwork. But I want to do it again next summer and try to really say, hey, property A won last year. Let's get you guys on the boat so we can take y'all out to lunch.
I love that from so many aspects. Number one, you're taking care of your people, and in return, they'll take care of you and the tenants, right? But then number two, when tenants, prospective tenants are shopping for apartments, they look on Google, right? Oh. Google's the biggest search engine in the world, and Google Maps is, I think, in the top 5. And so you can see those reviews that come up, and if you have a 1-star, one review and it's 1 star, from 5 years ago, that's still going to impact you today, even if the property management and ownership have changed hands multiple times.
Right.
It'll still impact you. But if you can see, hey, it's a 3-star, 3.2 star property, but all of these reviews, 50 reviews in the last 6 months, or most of them are 4 or 5 star. That says a huge thing, so I love that you're doing that. It helps, probably lowers your marketing costs as well, because you're not having to do as much marketing, which, when you lower marketing costs, lowers expenses, which improves the value of the property. Yeah.
Awesome.
Love that. And then you also know, another thing I like about that is those tenants that maybe only give you a 1 or 2 star, or heck, even 3 or 4, maybe they'll put comments on there like, this building is never clean, right? So now you have some free insight to for the property management company and the leasing manager or maintenance to say, hey, this why has this unit not been addressed, or why is this building dirty? And so it's some free insight. So now you can go and take care of that and do it quickly. So I love that you guys are doing that. I think there's so many benefits for so many reasons to doing that.
I'm trying to figure out how to do it on our properties that are more scattered with different management companies. So, but that was because we have 4 and they all know each other. They're within 5 miles of each other. So the staff overlap a lot. I'm even trying to think, because of the 8 properties that are, some of them have different management companies. Could I somehow do it like across all my properties to try to get, but they can't see in each other's systems.
Yeah.
Like everybody that's under the same management company. So I encourage everybody, if the GPs that tune in this, try something like that, because getting those Google reviews up is awesome. Now, I can tell you want a quick scary story that we ended up fixing. We had somebody that was mad because our manager would not give them back their deposit. Ended up, they got it back. They got mad. They called out their friends. We had 72 1-star reviews in less than 30 minutes on our property. They called out their whole crew of friends, and luckily we could go in and say, look, most of these people don't even mention the property or the manager's name. They're talking about their cousin not getting their deposit back, or friend. So Google pulled the bulk of them off pretty quick, but it still was a fight. And you can get it. We hired, I can't remember what there's an agency you hire to come in and clean that up too.
Okay.
We opted to pay the fee, because I'm like, we can't have all these 1 stars. And I don't know. I was like, I have no idea how to resolve this, but just the frustrating part was, if the person would have waited about 2 hours when the regional got involved, they saw the mistake and got the problem fixed, but they had already let the toothpaste out of the tube. And that was like, oh my goodness, this might be one of the worst. And we've had, little small fires, people run through walls, and the Google reviews, nobody was injured in those, but which is great. But that's the scariest of seeing all those 72 1-star reviews.
Yeah.
Counted on you at once.
Yeah, it's definitely important to have good reviews. And I do think that, having the property management company address the bad reviews and even the good reviews, you address the bad reviews, maybe they'll edit them and increase that. Maybe they'll delete it. But when there's good reviews, I do think that also encourages people to leave more positive reviews. Sure. But typically, it's interesting, because typically if something's going bad, they'll let people know about it. But if something's going good, they won't let people know about it. And I don't know if that's just human nature or what. So we've done something similar at a property, Nick, where, and I don't remember what it was last year, because there was a lot of bad reviews from, before the previous ownership. So we did something where I think we had a winner. I think we gave them a gift basket, if I remember correctly, like a gift card and some other neat things to a couple winners. So it was really cool that, a lot of people said, yeah, it's great. And what's really neat about that is now that encourages more people to come, just because it's not terrible Google reviews from 5 years ago. And so it is nice that there's positive reviews and people awesome. like living there. Yeah.
I just remembered this. What we have, our maintenance guys carry cards with a QR code on the back of it when they've finished a work order. One, it's like, if you're happy with your review, with the work we did, please leave us a review. And that was another thing. I had to go back because every time they were mentioned by name, we did, I think, $5. So I don't know how that tallied up. So we did do another little piece of that contest, that trying to get their names mentioned too. So
That's awesome. I'm writing that down.
this is all. I'm
Very
sure
cool.
that's one of the, and I learned it from somebody else that was doing on one of their properties. I'm like, oh, that sounds like a great idea.
Yeah. And I think all that, everything we've been talking about as far as the reviews and taking care of tenants, I mean, at the end of the day, it may not be necessarily like a exact bump in NOI, right? It may not be, oh, well, they left a good review, so that equates to $5 of NOI. That's not really how that works. But what that does is that allows us to potentially lower marketing or retain some of those tenants. And so as opposed to, okay, now, they're moving out because they're not happy with this, previously, but now that they left a poor review, potentially, now we can address it quickly. And now, okay, now they're happy with us. Because a lot of times it's not like tenants are upset with one issue, right? It's usually multiple issues or one issue that lasts a very long time. And so if that gets addressed with new ownership, when we buy a property, they may have been unhappy, but now they're happy because new ownership, new property management is taking care of stuff just like that. So I truly feel like, you do stuff like that. It's very simple. It's very, very cost effective. You guys spend a couple $100 on a really nice dinner or lunch. We spent, I think, $150 on per basket. I don't know how many we had, but only a few $100 probably. And that just, now even if one tenant stays, for that extra time because they know they're taken care of, now, we don't have to turn that property because we don't have to market that property. So we're saving money from not having to paint it and clean flooring. And we're making money because now it's not vacant for 2 weeks.
You're not having any vacant
yeah.
And you're losing about $30 a day on a average rent in most markets. Every day it's vacant. It's $30 you'll never be able to go back and get.
So just little things like that can boost income, reduce expenses, and the value of the property goes up. And so that, again, that's not just like what we've been talking about with the benefits, Nick. That's not just like I benefit from that or you benefit from that. All of the passive investors benefit from that too, right? Because now that they'll get more money, a bigger return or a little bit bigger distribution for cash flow. So I love all that. I mean, it's awesome how it works. Obviously, we're both passionate about it, but I love that conversation, Nick, with the Google reviews. What would you say your company goals are over the next 12 months or so?
We would like to get between 3 and 4 properties a year. Could be 2 to 4, just kind of depending on the size,
Yeah.
And so and continue to focus on properties that are getting returns to our investors in the 80 to 90% or better. Looking at 4 to 6% cash flow or better. What we're returning. That's average annual cash flow per year. Just think about on a 5-year hold. You're going to have less cash flow in year one just because you're doing a lot of CapEx. You're spending money on the property in that first year. You're turning over tenants potentially as you're upgrading these units. So there's going to be less cash flow in year 1 and year 5. It's going to be stronger, but if 5, 6, and maybe even a 7% average annual cash flow for our tenant, for our tenant base, for our investor base, and growing my investor base, just getting to know more people. Love sharing this information because so many people don't know about passively or actively, but mostly passively invest in real estate. The great thing about being an LP is you get the benefits of the real estate, you get the tax benefits, the appreciation, the cash flow from investing, but you don't have to do any work. I mean, you send a wire, you get monthly, should be getting monthly, at least quarterly, but I would shoot for monthly updates on your property that you can look through or not. We can see in our MailChimp, I can, at least most people open, but there may be a third to a quarter that never even open the newsletters. I do, if we're sending out quarterly distributions, I don't think people open their newsletters quite as much. If you're sending them a check or actually now direct deposit, but creating that value for this whole bunch of people that think all your options are either go buy a rental property on your own and have to deal with the toilets and tenants,
Yeah.
or you put your money in the stock market. But another option is investing passively in syndications, and then the syndicators and the asset managers are doing the work, and you're still getting tremendous returns. These are passive investments we're talking about. At somewhere 80 to 90% return on your money with a 6 to 7% cash flow. So, just for a round number, 100K investment in 5 years, you're going to get your original 100K plus another 80 to 90,000. And I don't know many places that you can get those similar returns. Plus, you're getting some tax benefits, depending on what your tax situation and your job situation. Everybody, it varies, but you are getting some tax benefits too on these investments.
Yeah, and thanks for going over the returns, because I think what a lot of people think is, oh, maybe that's slightly better than the stock market. Well, if you invest in the stock market, you're paying brokerage fees, commission fees, you're paying a fund manager, mutual fund manager, potentially paying for your account to be open. And then there's tax after that, right? So you may not get that 80 to 90% in 5 years. The stock market may, but you won't, right? But your 80 to 90% returns in 5 years, that's after all the expenses for property management, property tax. That's all the general partner payments for running the property, for being the asset managers, which an asset manager is just like a project manager. They're in their day-to-day, week to week, running the property. And so that 80, 90%, plus there's tax benefits to that, right? So I just love pointing that out too, because that was not known to me when I first started. I was like, okay, well, how much will I actually make from it? And it's totally different than mutual funds and IRAs, 401ks. So wanted to point that out. Nic, I know we have a few minutes left. What's a recent book that you've read that really stands out to you, or maybe you listened to it?
Atomic Habits. Actually, I bought one for each one of my kids. I can't believe I'd never read this book, but it's awesome. So I've listened to it because I got so into it. I had an audiobook, and I'm either, I don't run, I walk, or driving in the car. I do more working out in the morning, but I walk with my wife or walk around the neighborhood. But listen to audiobooks, that book is just, I love it so much. So I'm also trying to read it with the kids, where we're trying to do a chapter in a certain amount of time. And it just, it's one of those mindsets that he talks about being 1% better at something, or making one decision, to eat the salad or eat the cookies. And you're making a decision either way. And it's a vote for what you want your life to be. Do you want to have a healthier life? And, having a cookie every once in a while isn't bad. But if are you voting to have more alcohol or have water, and how you're going to feel in it? But that one little tiny vote is a step in the direction of what you want your life to be like. And it's just, that really was pretty profound for me to what am I going to decide to do on this one vote? Because you're like, one cookie's not that bad. And one cookie's not, but 5 or 6 are, or if you keep going down that route of too many and not having the healthier, whatever your healthier diet is. So I just think that book's been awesome. That finished that probably a week and a half, finished the audiobook a couple of weeks ago, and working through actually reading it, the physical book also.
Awesome. Yeah, that's there you go. There's the book. So if you're watching on YouTube, you can see what it looks like. But the Atomic Habits, I read that last year. Very, very good. Just get a little bit better every day, or or get a little worse every day. It's up to you. The choice is yours. I do think that's very powerful with mindset. And I know your analogy was health, but you can do that in everything, whether that's your business that you own, if you're an employer, great. If that's a real estate investor or whatever. So it's applicable to anything that you want to do, not just health.
Yeah, watching TV or reading a book to better yourself, or things like that through there. Spending time with your kids, reading them, or watching TV. It's just, they're all little tiny votes that you're making through the day.
Love that. All right. So what can people expect to see? I know I asked you about in the next 12 months or so, but what can people expect to see from your business in the next 5 years?
My wife and I are working on systematizing things. We've hit a point now where we are looking and bringing employees. to be able to do some of that, more of the gathering of KPIs. We've started our kids doing some of it. One, for we can pay them for tax reasons, and that's part of it, and just teaching them some of the business. But we need to start bringing. We are working on bringing in somebody to help with asset management. That's going and doing. I do a lot of admin stuff of gathering KPIs that I actually like doing it and like getting in the weed, looking at that stuff. But really, it's not the best use of my time.
Yeah.
Trying to do that stuff where we can get out and source more deals and be able to bring more deals to our investors. Instead of doing the day-to-day of looking at what occupancy is today, looking what they collected here and checking those things. I can teach someone to do that. I do have a challenge of, can somebody do it as well as I can? Maybe, maybe not. But if they, it's the 80%, if they're getting 80% of it, and there's a lot of it set numbers. My concern is I'm like, oh, well, I see something. I know to dig deeper over here. Can I teach that? But over time we can, or if someone does step A and I'm like, all right, here's something that's a yellow flag, then I can dig in instead of me doing the first level of data gathering.
Yeah.
Hiring somebody to do it. So yeah, we want to have, systems in place, and people running those. So we can get away more and not feel like, the world's going to blow up if we're not there.
I love that. And that'll definitely help you scale as you're hitting, 3-4 properties a year, but then also growing your portfolio and also helping more people passively invest in apartment complexes. I love that. What's the best way for audience to reach out to you if they want to learn about your investment strategy, want to talk about physical therapy, atomic habits, or anything?
But you can best is my website. It's at Thrive Multifamily, THRIVE multifamily.com. We also have my first name, Nic, NIC with no K, at Thrive Multifamily. And those are two. And yeah, shoot me an email. If you go to the website, my calendar link's on there. You can book a 15-minute call. Love to chat with anybody, or answer any questions on any of the topics we talked about. I love sharing this information. It's one of those things that the pie is very large. I'm not worried about pouring it in. And I found that that's one of the beautiful things I think about multifamily is I've come across probably next to no one, that's trying to keep everything hidden. There's the vast majority of people are like, hey, here's what I'm doing that's working. Yep. Try this out. Now, if we're bidding on the same property, we're probably going to keep our cards close for a little while. But if not, people want to help, and I want to help other people.
Yeah.
If somebody's wanting to grow in this or learn about passive investing, I would love to sit down and talk with you. I book 15 minutes at a time. Unless I have another call up against that, we usually go longer on those just because I can sit and talk. My wife will say, hey, we got to go on the calls. But no, please reach out to Thrive Multifamily or my email.
Love that. Okay. And we'll put those in the show notes so people can reach out to you, Nic. Man, and one thing I haven't said yet, Nic is a mentor. He helps people. He's helped me. We've had many calls. Nic breaks things down. Previously when I didn't know as much, Nic helped me. He taught me. So Nic's a very good teacher and mentor. So please reach out to Nic. Yeah, absolutely, Nic. Man, this has been great. I love talking to you, Nic, and with probably our dozens of phone calls previously, but in text messages. You probably rolled your eyes a lot at me, but thank you for not making me feel bad.
No, I think teaching helps me grow.
Yeah, I agree.
I'm keeping on. I don't take it for granted some of the things that beginners are thinking about, and it keeps you on point, keeps you looking at not overlooking some of those things that you may forget about over time.
Love that. Yeah, love that. Nic, thank you so much for being here. It's been great talking to you. Your growth with Thrive Multifamily is just pretty astounding. How you've gone from being a full-time, working at a job which you owned, going from there to where you are really in 3 or 5 short years, from when you got your first deal and then you left your company 3 years ago, and you haven't looked back since. So thank you so much for being here. Really appreciate the time.
Hey, Charlie, thanks for having me. I enjoyed it, and congratulations on all your success.
Thank you. Appreciate it.
Thanks.
Thank you for listening to today's show, brought to you by H&K Investment Group. your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing. Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.